Good morning. This is a how-to video how to set up your personal financial forecast after purchasing this template from myself, or this will also aid if you are setting up your own forecast with your own template. Um, I'd like to quickly go through how this template functions before we get started in the nuts and bolts of this. At the top, we have balance information. And so you can balance back to your bank account to see how much money you have in your bank account available, maybe how much credit card debt you have, and in order to ensure you have proper cash flow. You will be inserting history for the actuals, and the actuals are highlighted in blue. So it's easy to differentiate from the forecast in green. Um, Once you have history in here, on a monthly basis, you'll be inputting the actual results either transaction by transaction or by using a pivot table by a transaction download from your financial institution. The pivot table is a little bit faster, but if you don't mind doing transaction by transaction, it is a way that you can do this and then still use the forecast. So this is a very detailed forecast. Forecasts do not have to go down to this detail. This goes down to vendor level detail. And you can see in some cases, I might have 3 or 4 purchases from a vendor during a month. And this is how you would manually insert those, is by transaction in the formula bar. So just wanted to kind of give you a heads up of what this forecast would entail before you get started. Okay, so as I mentioned, above at the top is balance information. I like to see that above. So if at any point in time I might have something like a $5,000 purchase, it would actually really be an eye opener, from month over month. Maybe my bank account would go in the negative, maybe my credit card would go over its balance. So I can kind of keep a handle on that. The next section is by date. And then we go down to the transaction categories. This is all transactions from your financial institution. If you have many financial institutions, you can include those here so you have a full picture of what your earnings and expenditures may be. There is a total section in my template in order to subtotal transaction activity. This is a sum if statement. And you can see that it's linked to this cell here, bank dash checking. So anytime bank dash checking comes up in this column, it will total the amount in this column December 2023 and return a value. That is how most of these cells are working. You will really never use this. This is only for balancing information, so I can have a good working formula up here at the top. Here is the reconciled balances. So at some point in time, you need an open beginning balance, unless, of course, you open a brand new credit card at zero, let's say this month. You have your opening balance, and this formula will take simply the opening balance and will reference the transaction activity and return your new balance. And then the next adjacent cell turns to, the first opening balance, transaction activity, and that is copied forward. So this is your actual monthly balance, and you can see it's tied to the same thing up here, and that is how we have that function in here. If you don't care about balances and you just kind of want to see activity and you do run a risk if you do not have balances in this forecast that you might be off and you might not include some transactions, or you might be including too many transactions, like maybe double entry. That's why I recommend having balances in your spreadsheet. The next section is the expense summary section. This is a real good analysis tool that you'll probably be using the most. In order to make this a little larger, we're going to make the screen real estate a little bit larger. I've previously grouped these cells by highlighting, right-clicking, going down to the very bottom, and saying group rows. What happens when that happens is you can see these little highlights. They've actually grouped them, and I can plus those away to make my screen a little bit larger for everything else. These are the categories that I have, pretty typical categories: housing, utilities and insurance, food, required costs, optional purchases, credit card activity, earnings. And these I've also grouped. So if you want to plus these out, you can see I have subcategories in here: cable, cell phone, car insurance, house insurance, life insurance, utilities. I have, if you plus all of these out, many categories, and these types, just like the sum if for the bank, this will reference this text field here, and anytime this text field shows up in the transaction section, it will sum the amount in that current month, and then that happens on a monthly basis. So the text needs to be consistent. So for example, if I say gasoline, but above I say gas, it won't work. So the naming convention does need to be consistent. I've used this forecast many times, and so I might have started with, for example, if I go down to optional purchases. So I started with merchandise, and I might have identified I want more information. So crafts, gifts, maybe merchandise by person, pet costs, and also maybe this is optional, but maybe I wanted some purchases such as school supplies different, or pet food and litter that needs to be required. So that's more of a forecast that I can't get around, but I can get around merchandise purchases. So as you're actually using this forecast, you can improve your types and add new categories so that maybe one vendor, if we go up, for example, here we go, Sam's Club. It has groceries, a subscription, and merchandise, all for one vendor. And so when you're actualizing, you might have a subscription that hits once a year that you got to pay for. You might have merchandise. Maybe you buy a big piece of merchandise and want that broken out so it's not caught up in your groceries. So you start out with really one vendor, one type, and then as you continue, you can improve on your analysis the way you want it. In the beginning, I would recommend maybe noting down 5 to 10 different types and use those to start with, so it's kind of easy to get through and it balances rather easy, and then you can make it a little bit more complicated as you start to see things on an actual basis. So that is the summary section. There is one additional thing in this worksheet, is I've built some charts, and if we just plus food out, you can see here's some just some charts that are linked to that summary section that can give you a little bit more information. These can give you a visual aid. If, for example, let's say you make only $5,000 and you could say, man, I'm spending $2,000 to $3,000 more than I make. You can really help yourself rein in that spending on stuff that is able to rein in. For example, the idea behind this is optional purchases and subscription, and food is really your only way to vastly save money unless you want to try to cut out utilities or find a new apartment or something like that. So that's why these categories matter so much, is because when you get down to the budget and forecasting piece, we can work with optional purchases and subscription and food to cut down. But the idea behind the other things, they're really unavoidable. You can see here's a food chart. And so you have to go, and then you have groceries. And you can see this can also help you set a budget. So some months are kind of high, some months are better, but maybe I set a budget of $1,000. In this case, I think I set a budget of $1,200 for myself, and try to beat that every month. So that's the worksheet nuts and bolts. So let's get right to updating. So the first thing that you would want to do is work with the dates and get the spreadsheet set up so you can import data. So I've previously downloaded transaction history from my financial institution, Capital One. And I did that via CSV file. And you can see that this is the download from the CSV file. You can either open this in Excel or another Google Sheet for us to copy and paste from. You can also do this on your bank account as long as you log in online. You should have a download transaction option. You can see from this data, it's not really usable data. It's one transaction after the other. So this would take us entirely way too long to populate in the spreadsheet one by one. So what we're going to do is we're going to insert a pivot table. So simply click anywhere in the table, say Insert Pivot Table. It will open this pivot table option box, and what you want to do is it's going to say New Worksheet, and you just hit OK. You will see that there's dotted lines around the entire table, and that tells you the section it will pull in. Okay, so here's the pivot table that opened up, as well as this pivot table fields. Just FYI, if you click off of the pivot table, that field list goes away. All you have to do is simply click back on the pivot table and it will show up. So the three key pieces of information are transaction date, description date. Actually, we're going to use something different for transaction date. You can use two dates, posted or transaction. I'm going to use posted date because I'm going to set this up as a re-downloadable pivot table. So all you have to do is add in your new transactions, refresh the pivot table, and you have this as a real easy copy and paste into your worksheet. And then we also need debit. In this case, this financial institution has two types of records. You have debits, which are the purchases, and then you have credits, which are my payments to my credit card. In this case, I only want to do the debits as of this point. You will notice that both numbers are positive, and if I threw them in the same table, they would stay positive. And in our case, we need one of those to be negative so it wouldn't work. So we'll do those separately. You can see that there's date format up here. We're going to plus that out. You can see that there's quarters. I don't want quarters, so I'm going to simply click on the quarters and drag those up, and it should give me months like so. You will also see that there's a subtotal of year here. I'm just going to right click. I do want year. Because I want to tell the difference between last year and this year, but I just don't want the subtotal. So I'll right click, deselect subtotal, and then there you have your monthly activity. Now the data isn't super clean. It probably won't be super clean from any vendor or any financial institution. And you can see here, there's 3 records for 7-Eleven. And I believe those numbers behind the 7-Eleven are the store number. So that's why you have different records. In the case of Amazon down below, I think those are order numbers. So it depends on the transaction of what you're going to see. All you have to do is hit Shift and then highlight all the same vendor records. And we're going to group these together. So right click, go group down below, and it will group them and give them a header of group 1, group 2, group 3. All you need to do is click on the header name, group 1, and rename it. So 7-Eleven. So I'm going to go through here and clean up this data. Let's go ahead and do one more. Let's do Amazon. So all you have to do is hold down Shift and highlight all those Amazon purchases, group, and rename Amazon. Now when you minimize these, you only see one line for Amazon. So we're going to go through the data and clean up anytime something's repeated, and so it's easy to copy and paste. Okay, I've reached the end. I've grouped all the consistent vendors together. You can see that as we go through here, a bunch of stores that I shop at. Now that we're at the top, you can see that, we have a title and then we have a list of the actual vendor names below that. We want to minimize all of that so we have really nice data to copy in and paste. all you have to do is click somewhere in these row labels and right click, say expand collapse entire field. And it will collapse everything into that group name that you identified or the prior name that remains untouched. Now, one thing while I was going through here, I came across several Microsoft accounts, and instead of grouping these together, I left these separate because these are subscriptions. And the subscriptions are each their individual things. So I want to see those individuals so I can track them in my spreadsheet. This is something I just wanted to point out that you might want to do at the same time. We play a lot of Xbox, so we have like 3 different Xbox accounts over here. And then also, we had some games. So I just left these out. Microsoft is pretty good to keep the subscription name consistent, so you can see it's 1 month after the other. All right, so the data is ready for us to paste in. We're going to go back to our spreadsheet and we're going to clear out the old data. So simply highlight, and what I do, hold down Shift, Control, and just tab over to the right. It'll go to the end, tab down to the tab down, it'll keep going to the bottom, and we will eventually get to the bottom. And I think as soon as you see totals, you've reached the bottom of the data, and simply hit delete. Why that's highlighted, you see there's blue lines in here. Let's go ahead and just get rid of those blue lines by hitting the fill color and reset. We can fix those really quick where we go up. When you do your own financial institutions, I usually like to break those out by some kind of gray line or blue line so I can see the difference. But we're going to just make those cells the same size. Okay, so we're all ready. We need to make sure we have enough space. So we have a 9-row header. So we start at row 10. Let's go over to our data. We start at row 7. We go all the way down. We have 167 records. So we do have a little bit of header here. Let's make sure we have at least 100 and let's just say 80 records, just to give us a good section. So if we go all the way down, we do have some grouped, and I recommend to always have some extra space just so you don't paste into your totals. And if you do ever do that, just undo and insert some new cells and then repaste. So let's go ahead and just paste about 20 new cells, insert rows above. Let's see what we got. Now we have 190 rows. So that should be plenty. So there's one difference instead of copying and pasting this entire group is it goes vendor and then July data. In ours, we have vendor, type, paid with, and then July data. Before we paste in the data, we're going to go and update the date fields. So now we know the dates that we have. We're going to have July 23 through July 24. So that is the first date that we're going to have. So we're going to do 7/1/23 and then go to the next cell, do 8/1/23. And once you have a consistent list, or July 1st, August 1st, you highlight those, click until you get the cross, and drag to the right. And drag all the way to the very end and release. And now you can see these are the dates. Now it did change everything blue. I like to have blue actual and green forecast just so I can see the difference. You will notice that it went into the year 2031 if you're doing the same dates as we are. If you don't want that many dates in your forecast, you can simply highlight and get rid of the extra dates that you don't want. So let's go ahead and only go through maybe 2029, for example. And again, you can do as much of it. Let's get rid of actually through 2028. So delete columns, and then you have less to work with. Eventually, if you're using this on an ongoing basis, you will need to add future years. So it's up to you whether you keep those for right now or update those later. Then I'd like to go ahead and go back to July 2024 and highlight those in green. So I know those are the forecasts. Do a little bit of updating on the top. Say these are forecasts. And then while you're going through the data, you always know where you are. Okay, now we're ready to paste this information in. You will notice that we have a little bit of a difference. We have vendor type paid with. In this case, we have vendor and dollar amount. So we're going to copy in the vendor first, copy, paste, and then we'll go over to the dollars. Copy, and copy meaning Control C, and then selecting the first cell and Control V. And then there's our dollars. It went over to July. Let's just check the bottom by paging down. And we have plenty of space down here. So we can group and hide those extra rows. You can't really see it because of my record function down here, but group rows. Now I can minimize those, and I can use them in the future if need be. Now you'll notice that all these totals went to 0, and that's because we don't have a paid with function here. So let's go ahead and just update that real quick. Capital 1, copy, and paste that down all the way. And I would do that pretty quickly after you paste that in, just so you know if you're doing multiple financial institutions right back to back, you have them at the right time. Okay, so now we have vendor, we have paid with. At the totals, you will have some generic financial institution down here. Once you have your financial institution name, you simply copy and paste, and that data will come through. So we're just going to update this text. Capital 1. Great. Here's capital 1 down here. It's going to reference that same cell, and we don't know that balance, so we'll work on that momentarily. Okay. The next thing, if you notice, there's no values going down to the type. So that's what we need to insert is types. Now, in order to get through this list fairly quickly, one, you do have an option. In this transaction download, you can see they gave you lists, about 5 to 10 different options. I also gave you, options down at the bottom once you plus these guys out of types. But I would come up with just mainly 5 to 10 different types that you consistently use through here. And that way you can get through here rather quickly. So 7-Eleven, I'm going to say that's to go. We always go Slurpees and stuff there. If you go through something and you don't know what it is, because we're working with history, so you might not know every single purchase, go other. And car insurance. So we're going to go through this list and do this for every single transaction. Again, 5 to 10 merchandise, food, groceries, that kind of stuff. And then just be consistent, and I'll see you back here in a moment. Okay, I've reached the end. I have a type for every single vendor up here. Some I might not have used the consistent naming down here, so I'm going to go ahead and go update that real quick. So there was, okay, so I did use gas. I didn't like when I plus this out, plus everything out, and you can kind of just see, well, if you had something. Well, cable, I didn't use cable extra, I used cable. Cell phone, okay, I have something there, so that's working. Car insurance was working. I didn't have any house insurance, life insurance. And while you're using these, if you just delete those, that's fine. They can even stay blank because all you're really going to be referencing is the subtotal for that category anyways. Groceries, I didn't use groceries, I used food. Just for ease. Lots of costs here. And then if we go down to the very bottom, well, I'm really lucky. I have everything. So by using only 5 to 10, types, and as you were, I'm sure as you notice as you were going through here, once you already put one type of a type, it would pre-populate and make your data entry really easy. So now we have our data. Okay, so now we can get down to the forecasting piece. And if we minimize some of this stuff, now I'm using actual data from my actual credit card and I don't have my bank account information in here. So from time to time, I go back and forth to using my credit card versus my bank. So some of this information might not seem that consistent. For example, utilities. There's some money here, money there, but then, some months with no utilities, that's not accurate. But we're not going to work on adding all my financial institutions. Once we have one financial institution, you can actually add them with the same process. Now there's one last thing. We added the debits. So if we go back to the transactions, we need to add the credits. So in order to do this the most effectively is we're going to right click on that pivot table tab and we're going to say move or copy, create a copy, move to end. So now it's a different pivot table. You're going to click inside the pivot table. You're going to drag the debits and you're going to drag the credits here. And as you can see, there's not a lot of activity. These include returns just as well as payments. So we're going to have definitely these payments. Let's go ahead and actually, if you click here, you can get the plus sign. We're going to drag that to the very, very top. Let's just page down here and see what we got. We got returns. We got a cash back reward. Let's click on that and drag that one up to when you get the crosshairs and just keep holding it down and it'll go up to the very top along with this one. And then everything else is credits. Even this guy, this is a subscription promotion, so you get a credit. Okay, to make this easy for us, you can go into each individual vendor, like for example, Home Depot in July. We go back, we could go up to Home Depot. Oh, it's down here. Home Depot. We could go over to July and put an equals in front of the dollar amount and take away the credit. $85 or $85.81. We could do that. We're not going to do that though. Just to make this easy, I'm going to show you a quick way to get around the credits. And then in the future, you can add the credits into your actual data, but just because there's quite a few for time purposes, we're going to get around those really quick. So what I'm going to do is I'm going to group all of these vendors that have credits together, and we're going to create a credit card credit line. And there we go. So let's go ahead and group those. And we're going to say, let's say returns / credits. Okay, so now we only have a few things to paste in here. We only have 3 different credit lines. So let's go ahead and add those here. As I was going through here, there was a 0 for this Capital One payment and Capital One membership fee. I'm going to go ahead and drag these down to the very bottom. You might see the same thing in your data. I like to have something important like that down at the bottom or down at the top. There was also credit card interest. I'm going to move that to the very bottom. Credit card interest. And the rest of the stuff we can go ahead and sort. I might actually want to put a quick line in between there just so if I do some groups and sorting, I'm going to try to keep those guys separate. So we have Capital One payments. So let's go ahead and get the payments in there. All right, in order to do this, because remember these dollar amounts need to be negative for our forecast to work. We're going to copy all the datas or copy all the dollars, go over to the next cell, and we're going to right click on that cell. We're not going to paste. We're going to right click, paste special, and we're going to say subtract. So what that's going to do is that's going to put those values in negative values for us. So now I can copy and paste those in there. The next thing I'm going to have is we have this cash back reward. We're going to add that down here. going to just say other. We'll copy that in here. And returns / credits, other, because we're not going to take the time to figure those out. Okay, and they might be merchandise, who knows? But now we have all of this balanced. In order to get the balance correct, let's go ahead and zero all these out so we know what we're working with. Capital One. I'm going to log into my financial institution and find out now I'm working with a credit card, so I'm actually going to want to look at my available credit and then look at what I have as available balance left to spend. Okay, so I know I have an $8,700 available credit, and I have $975.87 of available credit. By using available credit as instead of balance, you're going to pick up those pending transactions, so you have everything. You could use balance, but then you're always going to be off those pending transactions, and I like to kind of have everything. This check field here, you simply say equals the balance, take away, and let's go all the way over to July, because that's the data that we have. And there's your 6/7/22. Now, with credit cards usually happen in the middle of the month, so we don't have a good ending balance for that June 30th, which is the month before this started. So what we're going to do in order to just kind of set this up for one time is we're going to copy and we're going to paste that value down here. And when you right click, paste values only. So, because that was a formula, we don't want the formula down here. We want the actual value. And so now if we go over to the very right, you can see that our current value, and let's get rid of those decimals. You can see my balance on my credit card is $7,724. I know I need to do some work. So now you can see the balance that is my check figure here is equal to my balance in July. As I go through the months and I actualize, I'm actually going to update this check formula to be equal to whatever month I'm working in. So if I'm working in August, I'm going to change that there. And so it's continually checking to make sure I'm in balance, especially if you're tight on your bank account and you're reconciling your credit card payment into that. It will make it very useful. The next thing I'm going to do is eventually I'm going to add in my bank, and I'd like to see that activity in here. So here's that payment. Right next to the payment, I'm going to have Capital One payment, except I'm going to have bank, same, I'm going to have it consistent, bank checking, and I'm going to say equals negative. And I'm going to just do that the entire length of the spreadsheet, because that's what it would be. It's going to come directly out of my bank. So now when I would add in my financial institution, I can add in my earnings and everything else, and I can actually see how much money I'm making. In this case, you're just adding all of those payments so you can see consistently, oh my gosh, I'm really in the hole. Because we're using the transactions that we downloaded from the financial institutions, the debits, the purchases were whole numbers. So earnings would be negative in this case. Now you can do it the opposite way. On your transaction download, you could do exactly what I did here on the debit side as opposed to the credit side, but just make sure you have to have one way and one the other way, and then you're fine. So until your forecast is fully up and you have all your data in here, you can see how these balances kind of get out of whack. Just don't worry about that for right now. We can show you how that works later. What we want to do now is work on forecasting. So if we scroll down to the bottom, you can see you already have some dollar amounts here to be able to use. I am going to, in this forecast, we're forecasting at the vendor level as opposed to this level. Now, in other forecasts, it's completely fine to forecast at this level. And that's, actually kind of what we're doing above. We're just putting it at a vendor line so it rolls up into here. So let's go ahead and do that. To make this easier, we're going to highlight all the transaction information and not include the payments. See all those subscription and payments. And then what we're going to do is right click, or actually, sorry, we're going to go up to data, sort range, advanced range sorting options. And we're going to change this to do by B, which is type. And we're going to sort. Now we're going to work on forecasting. So we've sorted our table by type. And we're going to go through here, and you'll want to be able to see the last 6 months of information. And then that way we can forecast either monthly, once a quarter, once a year, something like that. So here's a cable bill. I just recently started paying this with my credit card, but this should be something that should go forward. Now there's two ways to forecast. You can set a budget, like $100, or in case of cable or utilities, I want to take the most recent actual. So equals last cell, and then copy that forward. Okay, and we're going to go through here. Here's car insurance. Now, there was no activity here within the last 6 months, so I'm not going to forecast anything. I know that I actually pay for my car insurance on my bank, so if I had my bank account in here, I would definitely be forecasting that. Now, if you were forecasting car insurance, and let's say you pay every 6 months, that is something when you get to your forecast, you can easily put your budget and then go to that 6-month mark and then copy that formula all the way forward, and the budget would show up every 6 months. So this is why I like this forecast, is because, if you set a monthly budget, it doesn't catch those one-offs, especially those amounts that happen once a year. Okay. So let's go ahead and keep that in there. Let's go to February, copy that. And then by copying that simply forward, what it's going to do is it's going to go the last 6 months, and then just take that forward. Okay. So car repair, that's something that you can budget maybe if you wanted to. In this case, I'm not going to budget car repair, as it's just a very far and few in between, and I will be doing kind of an other budget. So once we get there, we can use that other budget to cover car repair in the case that it comes up. Family activity, if I'm going on a vacation, I might want to forecast that in here, and you can do that in any time. You can also work on savings if you have your bank account information in here. Work on growing that savings so you can go on a family activity. Now here's a good one, is food. So you can see I'm consistently shopping at Key Supers. And so if I just simply highlight by holding down shift and sum, and see this has a sum, let's go ahead and switch that to average. It's about 379. But if I actually look at the activity, July is a half month. In June, I spent $700. In February, I spent $700. I know during this period of time, I was trying to use my bank, so that doesn't really have a good consistent forecast. So what I'm going to do is I'm actually going to override July, and I'm going to put a $700 budget. And in this case, I'm not going to say equals prior. I'm going to set a budget. So that way I can try to stay within my budget, whether I go over or under every single month. It doesn't matter. Then I have Sam's Club. If I just go back, it looks like, when I'm really using it, it can go from $100 to $200. Well, this is food, so let's go ahead and set a budget of $150, and I'm going to override July as well. Okay. Now we get down to gas. Now, in order to populate this forecast rather quickly, we brought over all the gas station vendors. I don't like to see that because I really only want to see one line for gas. I don't want to really have to work with this every single month. So what I'm going to do is I'm going to take 1 minute and I'm going to move the total of gas into the very first row. So you got to switch this back to sum and see for gas, I have $131. So I'm going to put that here. And I'm just going to work on doing that for a quick moment, and then I'll come right back. Okay, so I've populated that first line to get rid of all these other gas. Now, when we did that vendor download, we could also group all of these guys together on that pivot table and group them and call the vendor gas instead, and that would save us some time, especially if you're going to use that pivot table to go forward and populate things in the future. That's something that I might recommend you do, and so it would be easy to copy and paste that information over. So I'm going to say gasoline, but I'll keep the type the same so it works with our formulas below. So now I have some real good information here that I can look at. I go from anywhere from 100, 400 on heavy months. So let's go ahead and put a $300 budget. Now, gas is something that you can't really get around unless you're doing just a lot of, driving around for, personal benefit. Usually it's getting to work, getting to school. So this is something that we want an achievable goal. So $300 seems like we should be able to keep within that budget every single month. Haircuts, we don't really get haircuts, but if you do get a haircut, I would definitely recommend budgeting that, especially if, guys getting haircuts every 2 weeks, that can really add up. So definitely if something is routine for you, go ahead and get that in there. Home improvement is an optional thing. I really don't want to forecast unless I have something like a major remodel coming up that I need to figure out how I'm going to pay for it. Medical, this is something that you might want to go ahead and do. And actually, when I get down to Walgreens, I buy prescriptions every single month. So I usually spend around $30 or less on prescriptions every single month. So that's something I can budget. On the rest of these things, it might be a once per year thing. So what I could do is say equals and go back to the August of the prior year and simply copy that and paste that for all of these cells. So it can kind of give you a running total. Now, you don't have to put in a forecast for this. This can be something that you can kind of just deal with as it comes up, or you could put something in there. Maybe instead of doing an annual amount, maybe you say, I want to do $330 times divided by 12. Now, the one problem with that is when you're actualizing and you have 0, 0, 0, and then all of a sudden you have all these 28s, and then you have a big $300 purchase, it's going to throw your forecast off and you're going to have a lot of unaccounted for. So, just by using a 28 monthly dollar budget doesn't really work well when you have once in a while budgets. That's why I actually like this forecast, because you can do this type of thing. Or what you can also do is just actualize it. You will have a place for, other costs, and, work with your budget, try to have a little bit extra of money in your bank account. And when you have these one-off medical things that hopefully you don't have, then you could budget for them. If you know it's going to be routine, like JB Dental, I'm going to always have this come up, then go ahead and do a budget like that. There we go. So we have some budget in there for dental, which is going to occur on a regular basis. Also, let's go ahead and put in the same thing for this psychiatry. Okay, so we have some stuff in there. Merchandise. Lots of merchandise. So, what I would probably do is, especially if you're routinely spending stuff on merchandise and it's all over the place, I would go down to a vendor that you frequent and I would put a budget in. So I'm going to go down to Target. And I'm going to say, let's give myself, I'm going to spend $100 on merchandise every single month. And so we're not going to put a budget in for all these little vendors, but this budget right here will cover the expenditures we're going to make all over the place for merchandise. Now you can adjust this budget as you need. Really, you're trying to set your budget within your means. So if you're trying to save, that will show you how much you have available for merchandise. And so that way you really know when you're going out to buy something, whether you have money or not. In this case, I'm going to actually insert a new row right here, and I'm going to have an other. So it's not going to have a vendor. And this is good. So when you have new one-off vendors, you don't really need a whole new line for a one-off vendor. And eventually, if you wanted to clean things up, you could move other one-off vendors. Like for example, I bet there's this one $10 for this weird name that I've never had again. So actually what I could do is I could move this $10 down here to this other and delete that row. And that way you kind of keep things clean. So if you have some of this stuff that just, like for example here, this fee consolidated, who knows what this is for? Let's move this down to the other and go ahead and do that. So there is some data cleanup you can do to minimize the vendors you have, especially if they're one-offs. Let's see, we have one more. My daughter got a speeding ticket, pretty expensive speeding ticket. Let's go ahead and get rid of that. So now you can start to see, some information. I would keep regular vendors that you have, definitely. But for one-offs, use this other category and save yourself a lot of time. So like merchandise, let's give ourselves a budget of $100 to be realistic that we might spend $100 on other things a month. And that can also cover that car repair. So we keep going down. Pet food and litter. This is something I definitely want to budget. I'm going to have to pay. This is something that's kind of a required cost. So let's set ourselves a budget of $50. If you look at the past, we're at least spending $50 once a month around there. So we have that in there. Pet vet, this is going to be something like the medical fees before. So it's going to be a once a year cost. So let's go back to August 24. Actually, let's start it in July. Go here. And we're going to copy that formula down because they're both the same vet and to the right. And so now we have that once a year vet bill coming in. And so you can see that this one's coming in once a year. This one's coming in once a year. So we have that information. It's going to be approximately correct, and you can move it around once you get closer to the date. So if maybe it doesn't happen here, you could move it forward a month or two and go forward like that. School costs. There's not anything really. Oh, there might be. So for example, we have routine, photography. Oh, my daughter had senior pictures, but then we had school fees. So there might be costs in September and February every year. Let's go ahead and do the same thing as the vet. We're going to copy that down to all of these school fees. So it's once a year kind of things. And then that way, when school time hits, it will come up. Now we get down to subscriptions. These are definitely things we want to forecast. Now I put subscription next to a lot of things. There might be one-offs in here. Like for example, there's this $100. Now that I'm here, I see it's not a subscription. It's actually merchandise. So I'm going to change that. I'm not going to forecast that. With everything else, I'm going to go ahead and forecast these dollar amounts. And this one, just like utilities, I'm going to say equals last month. And let's go ahead and do this. Let's get this one in here. And then we're going to copy this and go forward. Great. Now merchandise, we're going to skip. The rest of these subscription, we have a Netflix account. So we're going to copy this so it's an actual. And then equals. And then that's forecasted. So Paramount acceptance, that's a closed subscription. The other thing that I like to do with subscriptions is over here on the right, I actually like to put whether a subscription is active. For example, let's go ahead and fill these with green. And like this one, This is not active. This is canceled. This way, I know if I have an active subscription and I'm trying to save money, I can go ahead and cancel it. Let's go ahead and, do this for all of these subscriptions. Green. This one's canceled. It's a one-time fee. Subscriptions. And then these two are canceled. This will also help you in forecasting so you know what to carry forward and what not to. So here's Peacock. We're going to take that forward. Oops. We're going to take Peacock forward and Spotify. There we go. So now we have our optional subscriptions all forecasted. Go down, we have To Go. For To Go, I want a budget because it's realistic. I'm probably going to go there. So let's go ahead and put a budget in for something that I'm regularly eating at, like Chick-fil-A. Here we go. I'm going to put in a budget here. Now, when you put in a budget, you don't have to spend it at that restaurant. You can spend it at other restaurants. And then what you're going to do when you're actualizing, you might only spend $50 at Chick-fil-A and then $50 at Chipotle, but that will equal your budget. Here's Freddy's. Maybe we could do $50 there. Once out, we can eat there. Keep going. Oh, here's McDonald's. Maybe we'll give ourselves just a $100 budget to try to keep within with all the other vendors. And then that's about it. All this other stuff is kind of one-off. We keep going To Go. See how it's kind of all over the place. Here we go. Utilities. Here's a monthly water bill. So let's go ahead and do equals back and then carry that forward. Now, this one's going to be a little unique. This is a water bill. So in the summer months, I'm going to have a huge bill. And then in November, it's going to go down to pretty much nothing. So what I'm going to do is hard code and type in what my monthly bill will be in that fall period. Okay. And then I'm going to go to the first month where it's springtime, where I'm going to turn on my sprinklers and I'm going to hard code equal. And I'm going to go back to the last time my sprinkler was on, which was probably, October. Let's do September just to be safe. And I'm going to carry that forward. So let's see. Let's see if this works out. We're going to go to October. Now, we're going to go back to this prior October, and we're going to copy all of this forward. And what's going to happen is during the winter months, it's going to be 40, and during the summer months, it's going to be 170. This will really help you get around those expensive utility bills, especially if you have high furnace gas bills in the winter and then AC bills in the summer. Here's a trash service company. So this happens once a quarter. I actually just recently moved this over. So I'm going to put what my quarterly bill is in there, $115. And let's go ahead and just say equals this because I know it's going to happen each quarter. And there you go. So you have all of your transactions. Now what we're going to have is we're going to have the payment. There is activity down below, like I mentioned a little bit before, where we have Capital One. This includes the payment here. So what I don't want to do is I don't want to pick up the payment. So we're going to do a formula here. We're going to say equals, we're going to go down to this activity for the prior month. We're going to say take away this payment equals, okay, good. So that told me I spent $2,200 that month. So I'm going to say that's going to need to be my payment. And then let's see which one I did that on. Let's go ahead and just drag this formula down here real quick. And I'm going to throw a negative on that. So both of these will have to be negative. Okay, there we go. And just to follow along with the same formulas. So there I've picked up my total transaction activity from above so I can maintain my balance and carry that forward. There we go. So that's going to hopefully help us keep a pretty average balance on the credit card. You can notice that my bank is still going crazy. Within a year, I've spent $37,000 on credit cards. That's a lot of money. Interest charges. This one's going to be not too hard. You're going to look at the prior period balance like this, credit card, click that, times your interest rate, which is probably something pretty standard, 20, 31%, divided by 12 because it's not on an annual basis. And then you're going to copy that forward. And there, you have interest. Now, at some point, especially if you're paying off your credit card, you can add more payments. For example, if you're working on paying off your credit card, what you might want to do is you actually might want to add in an extra line to go ahead and put in some extra payments. So we're going to put payment, capital one. And in this case, what I'm going to do, we're going to just update this formula to equals negative sum and the bottom two rows. Now I'm going to copy that forward. So I want to pay off my balance. So what I'd like to do is pay an extra $500 or so a month to pay my payments down. But what I want to do is up here at the top, I want to see what my actual activity is for Capital One. So I'm going to change this to like a light or reset the color. And I'm going to say, Capital One. And what I'm going to do is I'm just going to manually sum. So manually sum. And I'm going to sum all the transactions. I'm not going to sum the payment, but I will include the interest. So I'm going to hold down Control while I click the interest. And let's do the returns and cashback. So that's everything, not the payments. And then I'm going to copy that forward. So that is my spend on any given period of Capital One. So instead of looking and doing a little bit of a complex formula, I'm going to say equals negative, and I'm going to take this activity. I'm going to copy that forward. Looks like it's the same thing. Now I'm going to insert a new line. It's just easier to know if your formulas are working. So sometimes I like to do things in different ways. So now I'm going to go over here and I'm going to say I want to pay an extra $500 a month. And we're going to have to update the bank account to do a sum now. And we're going to carry this forward. Now, at some point, when I eventually pay off my credit card, that interest is going to turn to negative because, the formula is simply set that way. So you can do something about this. Let's go over to here to where it's airing out. Okay, so see how this says $500? What we can do is we can say equals if, well, this is an if statement, equals if this is less than, let's say $1,000, then let's just do 0. Otherwise, we're going to do negative $500. But we got one too many things in there. Okay. Let's copy that. And you don't have to do a formula. You could just zero out that $500 error when you want to. There we go. So this is a little bit of formula to help me pay off my credit card at some point. And you can see right here, it's paying it off. Now, instead of doing a formula like that, I can easily go ahead and even just zero it out, and that's fine. It really just depends on how you want to manage it. So it's completely fine to do 500. Just watch out in those future years. If something happens to your interest and it might flip on you. And at some point when you're actually paying your monthly payment, you can do a little bit of more of a complex formula to catch up interest. So you can say equals if open paren. And if our payment here is greater than last month's balance up here, then 0. Otherwise, we're going to do last month's balance times our interest rate, 0.31, divided by 12 close paren. And now what will happen is it will automatically calculate that interest. Now carry that forward as well for all of these forecast months. And that's, again, why I like to have it green, so I know what I'm doing. And so you can see the formulas, or let's see. Where did my formula go? Okay, here we go. Let's copy that. Come here. Boom. So you can see that when my balance is up, I have interest, but as soon as I'm making a payment that's greater than my prior balance, it automatically switched it to 0. That helps you when you're forecasting. So, you, especially when you're trying to pay something off, it can keep it at a regular balance and make your forecast more accurate. All right. So that is the forecast. Let's go down to the very bottom, make sure we're in balance again, and we're good. So let's go ahead and just take a look at things. So we have housing, which we didn't have anything in this case. Again, when you're downloading your own things, they would come across. Utilities, food, required costs, optional purchases and subscriptions, credit card activity, earnings. So we have total expenditures here. We don't have any earnings, and we're all tied out. So now if we go ahead and analyze this a little bit, let's go ahead and get rid of, these groupings so we can see this on our screen. You can see I have my utilities in here forecasted, and you can see it goes up quite a bit when I have that car insurance. I have my food budgeted at $1,100. Looks like I can reasonably, hopefully, stay within that. Required costs, we've put gas, we've put pet bills, we have medical in there. Optional purchases, we do have some optional purchases. And then that is the area where if you're tight on money, especially if something's coming up like a big expense like that car insurance, maybe you don't do optional purchases in that month, or you try to cancel as many subscriptions as you can. Credit card activity, this is just to highlight how much interest you're paying on a monthly basis and maybe give you a real good reason why, well, I could use that $142 on something else. So let's go ahead and pay that off so I can have that extra money somewhere else. So that's why this forecast can be really useful. This forecast is done at this point. So you have a working forecast. Now, if you wanted to continue to add more financial institutions, all you would simply do is follow the same process, insert more lines, and go through the exact same process we did with this credit card. I know this is probably very time consuming for everybody, but once you get it updated, there will be a little bit of work about, let's say, give it an hour a month, updating this, and you will have something that you can really use to achieve your goals. Maybe you need to save and make some savings for a car. You have a vacation coming up, a big medical procedure, anything like that. It can really help you identify where you are. The one thing that you're not seeing in this forecast that I like to see is a realistic bank checking account. So in order for me to show you how valuable this information is, we're going to just go ahead and add something in here real quick, just to show you kind of how this is. So we're going to do paycheck, bank checking, and we're going to say that we make, let's say, $3,000. Okay, and it's got to be negative for earnings, of course, if we're following this methodology. Copy that and carry that forward. So now we can look up here at our actual bank account. Now, right here, we have good payment, but look right here what happens. Our account flips. and we actually don't have enough money. So I spent $5,000 and my bank went into deficit. So, that $5,000 has got to come from somewhere. So, um, if I actually made $5,000 a month, maybe I don't have a problem, and you can see that. But that's kind of why I like to add in all of my financial institutions, because it will identify those risks for you, especially if you're living from paycheck to paycheck. One of the big things that's not in here is rent or mortgage, which mine is $2,500 a month. So even if I made $5,000 plus my credit card activity, I'm maxed out right there. And so, this positive bank balance is definitely not going to be there. Let's change it to 4,000, even just $1,000. It's going to change it kind of substantially. Let's change it to 3,500. Maybe we'll just get by with that. Oh, I went negative in that 1 month for that one big purchase. Okay. So it can really help you to see, what you have and what your risks are. So thank you for watching this. I know this was a very long video, but I appreciate your attention. If you have any questions, comments, or concerns, please put comments down below or reach out to me on my email address. And I wish you the best of luck. Thank you.